Hello and welcome. I'm Natalie. Let's talk about money. So today we're diving into the impact of President Trump's One Big Beautiful Bill Act. And this was signed into law on July 4th. It's already making waves across the U.S. economy and financial markets. And so the company that I keep my investments with, the Capital Group, actually gathered insights from 4 different top experts. And they were an economist, a bond manager, an equity portfolio manager, and a currency strategist to help you basically just understand what the landmark legislation could mean for you as an investor and for the broader economy. Now, this article is again from July 7th, and I'll link it down below so that you can go in and you can read the whole article, because I'm just doing a summary of what these 4 experts said. And it's important that you get the full story if you want to know more. So I'll link it down below. So first, let's just start with what is the One Big Beautiful Bill. We heard lots about it up until July 4th. So basically, President Trump's new bill, signed into law again on July 4th, permanently extends major tax cuts from the 2017 Tax Cuts and Jobs Act. It slashes taxes on tips and overtime, and it introduces significant cuts to Medicaid, food assistance, and other social safety net programs, which is what concerns a lot of people. And the bill passed by the slimmest of margins in Congress, just 1 vote in the Senate, and 218 to 214 in the House. Today, we'll review what this may mean for economic growth, government debt, job creation, key industries, and even the value of the U.S. dollar, according to the Capital Group and to their story, again, that was published on July 7th. So our first perspective comes from Daryl Spence, who is an economist. And he says the tax cuts will likely give a modest boost to U.S. economic growth this year and next. But there's a catch. The benefits may be offset by lingering trade wars and other policy-related uncertainty. Now, the economy is expected to grow at a rate of about 1 to 1.5% this year, but inflation and unemployment could both tick up as the year goes on. So one major concern is the ballooning federal deficit. When you look online, this is what you're going to hear about, is the deficit. So this new law is expected to cement the U.S. budget deficit at around 7% of GDP for the next few years, which is up from 6.4%, and adding an estimated $3.3 trillion to the national debt over the next decade. So for the first time, interest payments on the U.S. debt have now surpassed defense spending. So what does this mean for you? Because that's honestly what we care about. So rising deficits could push interest rates higher as the government issues more treasury bonds and investors demand higher yields. And we could see the Federal Reserve lower rates if unemployment spikes, but rising inflation could make a tough call. And next up is John Queen, a fixed income portfolio manager who discusses bonds. So he reminds us that concerns about U.S. debt aren't new. They've been around for decades. And despite rising debt, the U.S. dollar still holds its position as the world's primary reserve currency. And the bond market is massive and efficient, pricing in risks and opportunities quickly. While high debt levels could eventually drive up borrowing costs, Queen believes the market will adapt. It always does. So predicting the exact moment when debt becomes a crisis is basically impossible. And so far, the market has managed these challenges well. Matt Hochstetler, did I pronounce that correctly? Probably not. An equity portfolio manager, shares his take on how the bill will affect different sectors. So he says capital-intensive industries like manufacturing, industrial machinery, semiconductors, and major tech firms stand to benefit the most. Those are the companies that Trump is most concerned about, honestly. So the law allows companies to immediately expense certain equipment and R&D costs, extending bonus depreciation and freeing up cash for reinvestment, which helps to grow businesses. Now, banks might also see a short-term benefit as new infrastructure projects require capital, which they're going to get from banks. Now, on the flip side, some sectors will, of course, lose out. Renewable energy providers face rolled back incentives, while oil and gas companies get new tax breaks. Medicaid cuts could hurt healthcare and insurance companies. So the big picture is, while the bill supports strategic industries like technology and defense, it could fuel inflation and hurt sectors dependent on government support, because that support just won't be there anymore. Finally, Jen Sondergaard, a currency analyst, discusses the bill's impact on the US dollar, which is really what we care about a lot. So the dollar has weakened by about 10% this year as of late June, mainly due to shifting growth expectations. However, the US still offers positive real interest rates, keeping the dollar attractive for global investors, which is what we care about. And unless US growth sharply weakens, the dollar likely won't lose its status anytime soon. Currency volatility may occur, because it always does, but it's trade and growth that remain the main drivers. So, to sum it up, President Trump's One Big Beautiful Bill brings sweeping changes: permanent tax cuts, deep spending cuts, and a big increase in government debt. Some sectors, especially capital-intensive industries, may get a boost, while others, like electric vehicles and renewables, face new headwinds and trouble. The bond market is adapting, and the dollar's long-term prospects remain strong for now. What's most important is what happens in your actual household and how you manage your lifestyle, your debt, and your money. So remember to invest in yourself today so you can make a difference for others tomorrow, and give the video a big thumbs up. Leave a comment down below. Be sure to subscribe. When you subscribe, you should hit the bell so you know when the next video comes out. Be sure to check out the full article in the description down below so that you can get the full story on all of these four experts who had opinions on the big beautiful bill. I thank you so much for stopping by today. Y'all have a great one.